Welcome to the stock workout where we flex on the market to make gains. In this video, we're going to be talking about Microvision Inc., ticker symbol MVIS. I'm going to be giving a brief introduction into this company, and then we will take a look at the charts and do a little bit of technical analysis. I will also be running through the broader market. We'll take a look at the Nasdaq index and the 10-year bond yields and see how that's affected the wider market given the huge sell-off that's been taking place recently. I'll give you a better understanding on how the market works on a holistic perspective, because when the market drops, you will see a majority of stocks drop recently. Tech stocks have been hit the hardest, which is why you see the Nasdaq drop, and the S&P 500 has carried on to set new highs. So we'll be taking a look at that. But before I get into it, if you haven't already, subscribe to the channel, show some support, hit that like button. It really helps the video. And now we'll take a look at the Nasdaq index. We can see that we ended the week at 13,215 points. At the beginning of the week, we opened around 13,330 points. So we were down about 95 points. We saw the Nasdaq pick up twice in the week. This was Wednesday over here, Wednesday 17th of March, and we were waiting for the Fed to give their presentation to let us know what is expected from the US economy and what the growth is going to be. They gave us all the numbers then and we saw it pick up. However, we did see it sell off once again. This sell-off would have been attributed to the 10-year bond yields. It came down quite low, down to about here, 13,035 points, and then we did pick up by 99 points again, which is a good indication. We were up 0.76% on the Nasdaq when we ended on Friday. That was just for the day. Overall on the week we were down slightly. If I just draw a quick info line, we could see that when we opened on Monday, up until closing on Friday, we were down about 115 points. So we were down 115 points for the week. So that was that. But when we were on the lows on Friday, we were down around 290 points. So we did recover slightly, which is a good indication. This sell-off has been attributed to the 10-year bond yields, and I'll get onto that in a second. If we take a look at the last 6 months of the Nasdaq, this is the general trend and the general overall picture that you can see. So previously there have been dips. Now these would have been when there's a sell-off in the market like there is here. So if you take a look from the peak there to the low point there, it was down around 1,100 points. Came down about 9.4%. Now any sell-off of 10% is considered a correction. Anything over 20% is considered a bear market. So when we take a look at this sell-off that's happened more recently, you can see that from this peak here to this low here, we were down about 12.5%. So at that point, we were in a correction territory. That was down here. And then when we move up to here, if I just swing that across, when we closed on Friday, since the high, since the previous high, we're down about 6.5%. So we're not currently in correction territory anymore, but a lot of stocks have been hit hard. Now this has been linked with the 10-year bond yield. So if I flip over to the 10-year bond yield, you can see this is it. So in the last week, if I pull up the 5-day chart, so when we opened, we were around here 1.63%. When we closed on Friday, we were up to 1.71%. On Friday it did come down slightly by 0.18%, but for the week we are overall quite up. It did shoot up quite quickly, and that is reflective in this sell-off that's been going on in this last week. If I switch back to the 5-day chart, as the bond yields came down, we saw the Nasdaq pick back up, and as the bond yields picked up and increased, we saw the Nasdaq sell off and literally crater. A lot of stocks did crater. Penny stocks are always hit harder than your big caps. So as I've drawn this trend line here, overall the Nasdaq was down by about 0.8% for the week. So that is the fourth negative week the Nasdaq has had overall out of the past 5 weeks. So you know, it's a bit of a mixed bag, but overall I do believe we are on the up, because if you switch now to the 3 monthly chart, you can see that we're quite up from the previous lows, and hopefully we are going to carry on. Oh, let's just close that. We are going to carry on picking up. Now, for those of you who don't know, the Fed said that it upgraded its 2021 GDP growth forecast to 6.5%, and that's the largest increase that we've seen estimated since 1984. It also said it expects unemployment to drop, which is a good thing, and that is bullish for stocks. Now, from the Fed's presentation, they have indicated that and said that with their policies, you know, they've created a perfect opportunity for companies to and the economy to continue growing, and that is the bullish stance for it. Now, the bearish stance for stocks specifically is basically to do with the 10-year bond yields. However, I do think this is slightly overstretched and a little bit unfair that tech stocks have been hit so hard. We've seen a rotation of money. We've seen hedge funds moving the money out of tech stocks into sort of banking stocks, which is why you did see the S&P hit new records and hit new highs on consecutive days. Now, one of the bearish scenarios for stocks is that if the 10-year bond yield does carry on climbing, and if it hits 2.5%, if it goes up and carries on climbing and sort of hits that 2.5% mark, bonds may start becoming more attractive instead of stocks from a returns perspective. Now, those are not my own words. Those were from a manager survey from the Bank of America. This is what they said, that at 2.5%, bonds may start becoming more attractive instead of stocks, because you've got to realize as well, a lot of the bonds are purchased from other countries, other banks, other institutions in outside of the US and from foreigners. A lot of the Japanese people do buy government bonds, US government bonds, because the US government bonds are better than their own Japanese government bonds. So the higher the rate, the more attractive it is to people. And that's when you'll see people with deep pockets moving money out of stocks into the government bonds. Also, on the flip side, if there's not enough demand for the government bonds, you will see that the yield will increase to attract new buyers. However, when we did see the last auction for the government bonds, they went through without a hitch. So I think that this is just an overreaction to bond yields rising, and this is the reason why. If we go back, if we go back sort of on the 5-yearly chart, as you can see here, the yields were sort of around 3%. And at 3% back in November 18, you know, markets were still doing good. Stocks were still doing good. Recently, we have seen the yields increase, and they've been increasing quite rapidly as well. However, I don't think it constitutes to there being a need to have a huge sell-off on the stocks. I don't think that the Nasdaq needed to be hit as hard as it has been. However, that's the case. This is now the yearly chart that I've got the Nasdaq Composite Index up, and you do sort of see it come down. I haven't measured this yet, so I don't know if this is a full-on correction, but it may be. It fluctuates. This one, so the Nasdaq did come down to its 100-day moving average. It's bounced back up to its 50. It's close to its 50-day moving average now. So this provided a good buying opportunity for anyone that wants to hold stocks long term. Now, just to Now, just to finish off talking about the Nasdaq Composite and the 10-year bond yields, you can do a side-by-side comparison. I've got the 5-day chart up. This is the 5-day chart of the Nasdaq, and this is the 5-day chart of the 10-year bond yield. As you can see, later on in the second half of the week, as you do see, the 10-year bond yield does start to increase. When you flip back over to the Nasdaq Composite, you see the Nasdaq Composite start to drop. So there's inversely related, and Nasdaq has been hit quite hard due to these bond yields. However, I do think it's an overreaction. The economy is set to grow 6.5%, which is amazing given the conditions with the whole pandemic. So this is also something to take into consideration with your stocks. If you are in the minus, you just take this into consideration. So now if we take a look at MVIS, brief introduction. Microvision engages in the development of laser beam scanning technology. They are developing a LiDAR sensor, and that is going to be huge for the company if they can get that into sales, if they can sell that onto other car manufacturing companies. As we all know, a lot of new cars are becoming autonomous. The push is for them to become completely autonomous. So MVIS are developing their LiDAR sensor. They have been doing so for quite a while. So that's the introduction to the company. Now, if we take a look at the charts, we can see that from the beginning of Feb to mid-Feb, we saw a huge run up in the price, and then a massive sell-off. Now, the sell-off I've already gone through. That would have been due to the broader market. Everything, all tech stocks have been sold off. Now we bounced off that $10 range, and we are up to $17. So, you know, first of all, hats off to the guys who bought at this price. Obviously, with the sell-off taking place, the RSI was quite low. I think this is a good point to point out that I've got the 21-day EMA pulled up alongside the 50, 100 and 200-day moving averages. I've got the volume and the RSI pulled up. Now, on Friday, the share price was at $17.35. It was up on the day 8.85%. Volume was lower than its average volume in the last 10 days. Volume was at 7.9 million. The average for the last 10 days is 10.9 million. Now, one of the main things that I wanted to point out here is that the 21-day EMA did cross back over the 50, 100 and 200-day moving averages. Now, that would have been seen with this increase in the price. You can see this white line has crossed over the other three lines, and then it stayed above the 200 and 100-day moving averages, but the 50-day moving average has recrossed that. So they are sort of battling it out here. One other thing that I wanted to point out is that we have a potential double bottom over here and over here. So I'll just draw that on the chart. Now I've just drawn that on the chart. I've got the hourly chart up. This is the 3-month chart. So if I zoom into the 1 month, just to give you all a clearer picture, we can see here that we have a potential double bottom formation here. So as you can see, the price dropped down. It bounced off this point here at about $15.30, and then it rose again, dropped back down again to roughly around the same level, and now hopefully we will push even higher. We saw both of them drops correlate in the RSI. The RSI did drop into the oversold territory. Anything over 70 is overbought. Anything under 30 is oversold. So we did see it drop down into the oversold territory once, and then we saw it drop quite close to 30 on the RSI again, and that correlates with this dip in the price over here. RSI has picked back up, and we did see the price also increase. So I would consider this a double bottom. I think this point here at around $15, between $15.60 and $15.30, I think would be your first level of support, because we bounced off that twice already. that would be one of the first near-term supports. We've bounced off that twice, and hopefully we will push to new highs. If you do see a breakdown of that price again, do keep an eye out on the overall market, as I've mentioned. But if we do see MVIS stock drop, you do want to see it hold or bounce off that $15.60 to 30 range. Now I've just marked that on the charts as well. So from here on out, if we do push on to new highs, that's a great thing. But if we do see a breakdown in the price, you do want to see it hold at least this $15.60 point. Currently, the level that we're at, $17.35, around here, $17.65, we got rejected on twice previously. And then we also got rejected at this $18.77 point. So they would be my first immediate points of resistance. As you can see here on this monthly chart, we did get rejected from this $18.80 point. And if we move further back as well, you can see roughly around the same point. We got rejected here, we got rejected here as well. Previously this was a line of support over here as well, so it did bounce, it just dipped under here, but it did bounce off there again until the price broke down. So this $18.81 point is one price point to keep an eye out on. So that's it for MVIS. We have a double bottom formation. I've given you the support levels, I've given you the next resistance level as well. Do keep an eye out on that. One thing we do want to see is that 21-day EMA cross back over the 50-day moving average as well. Do keep an eye out on the broader market. Volume is one thing to keep an eye out on. Volume is quite low at the minute, but as long as we do hold that price at $17.35 and the 21-day EMA does cross back over the 50-day moving average, then I don't think there's anything to worry about. If MVIS can manufacture and sell their LiDAR technology to car manufacturers, I am pumped for this stock. I think it will go on to do great things. Market cap's at about $2.7 billion according to TradingView, so it is a low market cap, and I think they can go on to do great things. If you appreciate that video, subscribe to the channel, hit that like button, and I'll see you on the next one.